Wall Street investors are dumping homes across the U.S. housing market, and in many cases, they're doing it as much as 20% below market value. Because this is the house behind me being sold by Invitation Homes, the largest landlord in America. It's a 4-bed, 3-bath listed on the market for $245,000. Now that's only $109 a foot, a massive 18% discount to market value. And what many of these corporate landlords are doing is exiting the market right now. They stopped buying and now they're starting to sell. And one has to wonder what the sale of that house is going to do to the value of all these other houses in the neighborhood. Now, the way I know that that's a Wall Street investor selling the house is because I looked up the tax record, and the entity that owns it is 2018 IH Borrower LLC with an address at 1717 Main Street in Dallas, Texas, which is the headquarters of Invitation Homes. Now, if you guys don't know who Invitation Homes is, you should, because they own over 85,000 homes across America, and they're America's biggest landlord. So you have to ask the question, why are they dumping houses south of Atlanta at 20% discounts to market value? And what's alarming me is that this investor behavior is now starting to closely mirror what we saw in 2006, 2007, right before the last crash. Most notably, there's a massive spike in supply in homes for sale. In this zip code in McDonough, Georgia, where these investors are selling, there's now almost 340 homes for sale, which is 300% higher than it was during the pandemic, and now at the highest level in 8 years. We're seeing supply skyrocket all across states like Georgia, Tennessee, North Carolina, South Carolina, Texas, and Florida. And it's almost as if the investors kind of see it coming before everyone else, and they get out of the market before everyone else. And I'm shocked at how cheap some of these prices are here south of Atlanta. These neighborhoods actually look like pretty nice neighborhoods, but you can see the house behind me. That's currently on the market for $348,000. It's a 4-bed, 3-bath, 2,800 square feet. So that house is on the market for $128 a foot. I mean, that's below replacement cost in today's market. You can't build a house for less than that, and yet that's what we're seeing for some of the list prices here south of Atlanta. Now, of course, I do have to be honest with you about one thing, and it's the fact that the Wall Street investors only own a small share of homes on the U.S. housing market. They only own about 1 to 2% of homes. Companies like Invitation Homes, Progress Residential, First Key Homes, American Homes for Rent, they own about 500 to 600,000 houses. So as a percentage of the total housing stock, that's pretty small. And these investors starting to sell certain parts of their portfolio isn't going to cause a national housing crash. However, in certain neighborhoods and cities, it could definitely cause a housing downturn because these investors own very concentrated pockets of America. The Atlanta metro is probably the #1 area where these investors owned. A lot of them swooped in 2021 and 2022 and bought up homes very cheap. That were in foreclosure at the end of that last crash. And now they're seeing this market having peaked and prices start to drop, so they're selling. All right, folks, I'm about to take you to another house that a big Wall Street investor is selling. This house is also selling for less than $300,000. It's at a big discount to market. But first, I want to talk to you about why I'm making this video and why I'm traveling around the US showing you these Wall Street investors selling the houses. And that's because this is a key indicator that you need to understand about where we are in the housing cycle. And when you see the big guys exiting the market at discounts, just basically fire sailing homes, that's a signal that things are shifting. And what's shocking to me is that there's so many people in the housing market who still don't know this. Like the first house I showed you from Invitation Homes, I went up to it and there was actually a couple touring it when I went up to it, and there was the realtor there. And I said to the couple, hey, do you guys know who owns this house? Who's selling it? And they said no, and I told them it's a big Wall Street investor. It's actually the biggest landlord in America. They had no idea. And then the realtor, when I said that, was just dead silent. And I was like to the realtor, oh, did you know that? And she was like, yeah, I looked it up in the tax records. Obviously, she didn't tell the prospective buyer. I think that is an important thing to know. If you are a buyer, are you buying from a big corporate landlord in a city like Atlanta? You should definitely know that. You should look up the tax records and know everything about the property that you're potentially buying and who the seller is. And I think the other reason I'm making this video is to show you that the values are dropping, and it's not just in Florida where they're dropping. Obviously, a lot of you guys know prices are dropping in Florida. I've shown you that conclusively over the last 6 months, but now they're dropping in Atlanta as well. Atlanta is the biggest city in the South, pretty much, and prices here are dropping. So that's got to also be a warning. In this zip code, data on RevenTrap is showing that prices are down 1.4% over the last year. They're down 0.4% over the last month, and I think they're going to continue to drop with these investors selling and with what the inventory and supply figures are showing you. Because here is yet another house being sold by a big Wall Street investor south of Atlanta. This one, it's for $294,000. It's a 5-bed, 3-bath. And this one's being sold for around $125 a foot. So being sold a little more than the first one I showed you. The owner on this one is First Key Homes. And the way I was able to figure that out, looked up the tax record. The owner is FKH SFR LLC. This is an entity that owns thousands of homes, and they're based in Marietta. First Key is the corporate owner. And what's alarming to me about this house, which is now actively under contract, so someone potentially is going to buy this, but what's alarming to me is the description. In the description, it specifically says that the new owner is going to need to replace the carpets and that there's some TLC that the house needs. So maybe that's one of the reasons why it's being sold at a low price. But it got me thinking, why is one of the biggest Wall Street landlords in America not replacing the carpet before they sell the house? It almost suggests that the Wall Street landlords are trying to get out as quickly as possible on some of these homes if they're not even just replacing the carpet. That would be such a simple thing to do and a cheap thing to do to make the house look better and sell better, but they don't want to do that. They just want to get rid of it. On that first house I showed you was a similar situation. When I talked to the people outside, they said it definitely needs some work. And so I think this is kind of an interesting dilemma if you're a potential home buyer, and you guys could let me know what you think. Like, would you buy a house from one of these corporate landlords? And would you potentially buy it, at a good price? Maybe it's a discount to market by 15 to 20%. You got to do a little upkeep. But I'm saying to myself, if I were to buy one of those homes, I'm concerned about what's going to happen to the home values here over the next couple of years. Because I'm saying to myself, why are they selling? Right? Why are they selling, and why are they selling so fast? And, I have my suspicions about why they're selling, everyone. It's because they know that certain neighborhoods and cities are in for a housing crash. I mean, for instance, in this zip code, prices went down 40% in the last downturn. Actually, on that house that First Key is selling, the price went down a lot in the last downturn. I think that they bought it for around $85,000. It was a 40–50% discount. And so they're actually making a decent amount on their sale. But the values have the potential to go down by a lot, everyone, because they're still so overpriced. I mean, home values in Atlanta are probably 25–30% overvalued from their long-run norms. And they've just started to correct in many parts of the city, while in other parts of the city, they're still going up. So right now, I'm south of Atlanta. If you were to go north of Atlanta to some of the nicer suburbs like Buckhead and Sandy Springs, prices there are still going up. It's almost like if you draw a line through the middle of the metro, data on RevenTrap, the top half is still appreciating, the bottom half is dropping. And so we still have this interesting bifurcated housing market, not just across America, but across different metros and cities. I mean, something completely different could be happening in your neighborhood compared to one 5 miles away, and to understand that, you're going to have to access the data. But let me give some optimistic takes here in the long run on Atlanta's housing market, everyone. I actually come up to Atlanta quite a bit. I have some friends here, so I'm pretty familiar with the market. I mean, this is a city that is probably in the long run a good place to invest. It's a high growth area. It has a lot of Fortune 500 companies. We're talking Coca-Cola and Delta, Home Depot. I'm pretty sure the metro area of Atlanta has more Fortune 500 companies than the entire state of Florida. And so you're dealing with a much more fundamentally sound economy here, with good corporate jobs, good wages, good job growth. Median income here is around $85,000 to $90,000 a year across the metro. And in the northern half of the metro, median incomes are $150,000 to $200,000. Microsoft also has a presence here in Atlanta. So I think after this correction takes hold and the prices drop, this could be a good area to buy for the long run. The other thing we should talk about is the rental market. So the rental market here is also in a bit of a downturn. Data from Apartment List shows rent prices in Atlanta have dropped significantly over the last 2.5 years. There's a lot of apartment buildings and multifamily buildings that were built that are just sitting vacant right now. I mean, we have apartments offering 2 months concessions, 3 months concessions downtown. And a 3-month concession, everyone, on an apartment, that means that they're gonna give you 3 free months rent on a 12 or 13 month lease. That's like a 20 to 25% rent discount. And so many of these apartment landlords are also very desperate. They're struggling to fill their units, their costs are going up due to inflation, their interest rates are going up. And as that's happening, the rents are going down, which could be another reason why these Wall Street investors are selling, is that not only do they see that the future price appreciation here the next 5 years isn't going to be good, they also see that their cash flows aren't really good from a rental standpoint. You know, one thing that's gone up pretty much everywhere in America over the last couple years is property insurance. And that's something that cuts into landlord profits right off the top. Property insurance doubles, that means your NOI goes down. Meanwhile, if your property taxes go up, that also means your NOI goes down. And so it's just really tough math right now for real estate investors to make it worse. And one of my favorite graphs to actually prove this out is by looking at the comparison of the cap rate in America to the 10-year US Treasury yield. And you could see historically the cap rate for investment properties was always higher than the US Treasury yield, meaning that investors got a premium for buying real estate above buying government bonds. But fast forward to today, that's no longer the case. The 10-year US Treasury is around 4.5%, right around where the cap rate is, meaning that if you were to buy one of these houses as an investment, the yield you would get on renting it out would really be no better than you buying a 10-year US government bond. And that's just not enough risk-adjusted premium to make it worth buying real estate. Because to buy real estate, you got to deal with the management. You got to deal with repairs and maintenance. You got to deal with evictions, especially here in Atlanta. This is a big metro for evictions as well. It's also a big metro for squatting. You got to deal with all of that headache as a landlord to get a very minuscule return in a market where prices are likely to drop the next couple of years. So it's just not a worthwhile situation right now to buy for most real estate investors. But on the positive side, there's still some pretty cheap prices here in Georgia. You know, I was looking on Zillow, and you could still buy a house in some of these outlying suburbs south of Atlanta for 250 grand, like a 4-bed, 3-bath house for 250 grand. You might not be in the best neighborhood, but like, you know, this neighborhood actually looks pretty good. If you're asking me, looks like a good family-friendly neighborhood. You could actually buy a house that's decent for a decent price. You cannot say the same for Florida right now. Florida is still massively overvalued and massively overpriced. And even though values there have dropped 5%, 7% in some markets, you still look at the prices and you're like, this makes no sense. Comparatively here in Georgia, you could actually look at some houses and feel like, hey, maybe that might make some sense to buy. Also, if you go out towards Athens, Georgia, there's some nicer homes out there on big plots of land, 2-3 acres you can get for $500,000, pretty good value. And also to the northern part of Georgia, towards the Tennessee border, there's some beautiful mountain country homes. A lot of those have gone up a lot in value the last 3 or 4 years, but some of them are still within the realm of reasonableness from an acquisition standpoint. But in the short term, I expect values in Georgia to drop more generally due to these investors selling, due to the big surge in supply, due to the fact that prices are already pretty overvalued. The question is, what's gonna happen in your city and zip code? And to answer that question, I would encourage you guys to go to www.reventure.app, where you could search your zip code and immediately start looking at the housing market metrics. Home value and inventory data is free. You could see the historical home value inventory trends for free. That's a great start in terms of understanding where your market's heading. Our price is dropping right now. From there, you can sign up for a premium plan and access our home price forecast score over the next year. In this zip code, the score is a 35 out of 100, well below average. We forecast declining prices here. However, that's not the case everywhere in Atlanta. So see what the price forecast is for your zip code on Reventure app right now.